This is a rapid summary of Profit First by Mike Michalowicz. There are three main points to this book. First, it completely flips the traditional accounting formula to guarantee profitability. Second, it provides a practical cash management system using multiple bank accounts. Third, it establishes a simple, repeatable rhythm to make financial discipline a habit. Let's explore these points. The first and most important concept is the new formula for profitability. For decades, businesses have run on the formula sales minus expenses equals profit. This makes profit a leftover, an afterthought that only materializes if there's anything left at the end. Michalowicz argues this is why so many businesses struggle. He proposes a new behavior-based formula: sales minus profit equals expenses. This small change has a profound psychological impact. By taking your profit first, you force yourself and your business to operate on the money that remains. This leverages a principle known as Parkinson's law, which states that our demand for a resource expands to meet its supply. When you treat all your revenue as available for expenses, your expenses will inevitably rise to consume it. By taking profit first, you constrain the amount available for expenses, forcing you to be more innovative, efficient, and frugal in your operations. The second main point is the practical system for implementing this formula. Michalowicz calls this the small plate system, which is essentially the envelope system for your business. Instead of having one large bank account where all money is jumbled together, you set up a minimum of 5 accounts. First, an income account, where all your revenue is deposited. Second, a profit account, for your predetermined profit percentage. Third, an owner's compensation account, to ensure you are paid consistently. Fourth, a tax account, so you have the funds ready when the tax bill arrives. And fifth, an operating expenses account, which holds the remainder of the money you have to run the business. This system makes your financial reality visible at a glance. You can't accidentally spend your tax money on a new software subscription because that money is no longer in your operating account. The third point is about building a sustainable rhythm. The Profit First system is not a one-time fix, it's an ongoing habit. Michalowicz recommends a simple routine. Twice a month, on the 10th and 25th, you allocate all the money that has accumulated in your income account to your other accounts, based on target percentages. You don't need to start with huge profit allocations. In fact, he advises starting with just 1% in your profit account. The initial goal is not to become massively profitable overnight, but to build the muscle and prove the system works. As your business adapts to operating on less, you can gradually increase your profit and owner's pay percentages over time. This steady rhythm removes financial decision-making from your day-to-day work, preventing impulsive spending and creating a predictable cash flow. In summary, Profit First provides a powerful and simple behavioral approach to cash management. It argues that profitability isn't an event, but a habit. By paying your business first, you change your entire mindset and build a financially healthy, resilient, and permanently profitable company by design. For related reading, consider first, The E-Myth Revisited by Michael E. Gerber for systemizing your entire business. Second, Simple Numbers, Straight Talk, Big Profits by Greg Crabtree for another perspective on small business financial intelligence. And third, The Richest Man in Babylon by George S. Clason, which teaches the timeless personal finance principle of paying yourself first.